That's right. Robert Habeck flying into Beijing, not just an economy minister, which is there, but also...
Finally, the European Union is asking China to negotiate. They realize that a trade war is disastrous. Beijing will suffer initially, but the EU economies will be devastated in the long run. China knows it has a strong position and is demanding that all tariffs be eliminated by July 4th. For the Chinese, it's all or nothing. Learn more about this story here on the Whells channel. Hello, Whells channel crew. I'm Vini, and today we're going to try to understand a bit better the tension happening between China and Germany. Even though they say otherwise, Europe is still taking a tough stance against China, and this became very clear during the recent trip by Robert Habeck, Germany's economy minister, who went to China and told them to negotiate with Europe and stop trading with Russia. What came out of this meeting was an absurd level of double talk. Habeck told China that EU tariffs on electric vehicles were not punishments. But at the same time, he said that China's trade with Russia was hurting economic relations with Germany and Europe as a whole. There's a reason why the Chinese premier didn't bother to attend the meeting. It was because of the way Germany approached the situation. Instead of trying to ease relations, Berlin delivered scoldings and life lessons. And that's not something China wants to hear. Habeck said that Europe and Germany wouldn't reduce their dependence on China for raw materials and critical goods if Beijing continued to support Russia's war. He basically admitted that Germany punished China over Russia by importing fewer goods. But Europe itself is still buying a lot of Russian gas. This doesn't make sense. This moral argument doesn't hold up. At the same time, Habeck criticized China for using coal to power its industries. Under the pretext of global climate change, he wants Beijing to shut down its coal plants. But they represent 60% of China's energy supply. In other words, Germany wants China to switch to a more expensive fuel to save the environment, but also to save its own industries. The level of disconnect here is off the charts. Beijing isn't going to listen to this. Why would they? The reason countries manufacture in China is precisely because of the lower energy costs. So let's try to understand why China is winning this industrial race. They have a good mix of renewable energy and fossil fuels. Most of it comes from coal, while solar, nuclear, hydroelectric, and wind power are being gradually increased. Because coal is very cheap. Even in 2030, fossil fuels will still make up most of their energy mix. If gas is cheaper, they will use more gas. If solar energy is the cheapest, they will simply install more solar panels. This is the true definition of energy independence. This system gives Beijing ultimate flexibility to lower its industrial costs, allowing China to continue being the world's cheapest manufacturer. And the longer China stays on top, the harder it will be for the West to slow down its economy. What Europe doesn't understand is that it still needs China, especially when it comes to investments. Since 2016, China's investment in the EU has been in free fall, from almost 50 billion euros to less than 7 billion. The remaining investment is focused on electric vehicle factories and battery plants. But what do we see today? Trade barriers against Chinese cars and worsening relations with the West. Chinese electric vehicle companies are pulling out, and this will be a big problem for German industries. France and Germany have invested billions of euros to develop their battery industry. But all the money in the world can't replace two key components: having an integrated supply chain and cheap energy to run the factories. Take electric vehicle batteries, for example. China manufactures them for about 53 euros per kilowatt, while the global average is almost double. That's a big difference. Europe simply can't compete with that, and it's hurting the German and French automotive industries. Northvolt, which is the largest battery manufacturer in Europe, simply can't increase its production. The Swedish company can't manufacture electric vehicle batteries at a sufficient scale, and there are quality issues too. Germany's BMW canceled a €2 billion order with them because the batteries didn't meet the specifications. Supply chains in Europe are severely broken compared to China. Industries need investment and access to Chinese expertise, but the entire environment there is becoming so toxic that it's risky for companies like BYD and CATL to set up factories there. While Europe is suffering, another country is celebrating, and that country is Mexico. Because of this, Chinese companies are moving away from the West. The electric vehicle giant BYD is building factories around the world in growing markets. They have a plant in Thailand and are expanding in Brazil, and of course, Mexico. And Mexicans are really excited about it. The BYD plant will provide 10,000 jobs for the country. The company is in final negotiations and the deal is practically guaranteed. What Europe lost, Mexico gained. Investment money, Chinese technology, and the creation of an electric vehicle hub in South America. Unlike the West, which doesn't want China nearby, Mexico is fighting for Chinese investments. BYD received proposals from 23 Mexican states for its plant and chose 3 potential locations. That's the level of demand for Chinese factories. The company is also considering selling 50,000 cars in the country. Now, BYD isn't building in Mexico to supply the United States. That's not their main goal. The 100% tariff is impossible to overcome. When the car reaches the United States, the price is too high. Chinese electric vehicle companies are building in Mexico to supply Latin America, where the market is growing and where the future is. The United States has taken a totally protectionist stance, and there's simply no future there. To sum up, basically China is responding to tariffs by saying they don't care about them. Yesterday, for the first time, the Chinese electric vehicle manufacturer launched a new product outside its home country, and BYD chose Mexico. They launched a mid-sized electric hybrid pickup, and the company's head in America said they have no plans to enter the U.S. market. So Biden's announcement doesn't affect us at all, sir, said the president. He added, when we build a plant in Mexico, we only consider the Mexican market and other countries. We don't consider the United States. BYD has basically written off North America, and the United States is stuck with expensive electric vehicles. Decoupling from the United States may hurt, but Chinese companies have other countries to sell to. BYD is a perfect example of an expensive item sold outside the United States. The pickup costs about $53,000 and can only be bought in Mexico for now. Now Mexicans can drive a better and cheaper pickup than Americans. Chinese electric vehicles are dominating Latin America, and they are not kidding. They are capturing market share. Chinese brands account for 87% of electric vehicle sales in South America and 20% in Mexico. And when you're selling so many cars to a region, it makes total sense to manufacture where your customers are. America's trade war with China isn't going to make a difference. It won't reduce inflation. It will increase it, especially for people who need cars, who are the majority in the United States. The revenue from import taxes is minimal. Even if you impose tariffs on all sectors, it will only represent 2% of the total revenue. You anger China and your domestic market for just 2% more revenue. In response to this protectionism, American manufacturers will simply raise prices because they can. There's no more external competitor. This situation will unfold in the European Union too. Over time, Volkswagen and Mercedes will raise prices. There will be less competition to reduce costs. Western consumers will suffer a lot. Meanwhile, China will enjoy selling to everyone else. Mexico will be BYD's hub to send its electric vehicles to the Latin world. In a Wall Street Journal survey, they found a shocking fact. In the United States, among the public under 40 years old, 76% of people would buy a car made in China. This shows that price is still a very important factor. More than a third of people would still consider a Chinese vehicle. People want cheaper cars. Europe's tariffs on China won't end well, and I think they realize that. That's why the EU wants to negotiate. But now it's your turn. Tell us, what did you think of Germany's stance? Will Latin America be enough for BYD? Let me know in the comments below. We made a video this week talking a bit more about electric cars. It's right here. Subscribe to our channel and don't miss the next videos. See you.